Let's move on for you now and talk bonds and plenty more besides. Jim Stening from FIIG Securities with me in studio. Jim, amidst all of the hoopla there, we must pull away and focus on some important developments when it comes to, indeed, Rick Battolino yesterday talking. What did you really deduce from the Deputy Governor's utterances?
Yeah, well,
Delphic or not?
Excuse me. I think it's marginally dovish comments. I think very interestingly, he's sort of referring to this margin that seems, or this I suppose, lack of control that monetary policy seems to be having at the moment, where banks are adjusting lending rates over and above the official cash rates, but also across the book. I mean, really, depending on which sector, they're either lending or they're not. So monetary policy needs to be implemented in a way that takes that into account. So that's, it's very satisfying to see that they're sensitive to that, obviously. And what it probably means is that we're not going to see the peaks in the actual official cash rate that people first thought in this cycle.
And was partly that also a lead into the growth figures from yesterday, which were fairly anemic, although, underlying it there is still strength, but the headline number wasn't exactly one to get.
That's right. That's right. I think, these numbers obviously relate to the September quarter, and the September quarter, in this environment seems like ancient history. Really, monetary policy does have to be preemptive, but yeah, they've certainly tabled some very aggressive growth targets for next year. I think fundamentally, globally, the growth story is not a good one, and that will impact on Australia.
So it's interesting how you had Treasurer Swan yesterday saying, look, there's need for further stimulus spending. We're not out of the woods yet, but you're saying, if anything, that will potentially be offset by the Reserve just moderating any tightening now, not sort of putting the accelerator down on further tightening.
Well, I think, look, it's very interesting in the capital market at the moment, because arguably the Reserve Bank isn't controlling monetary policy or the flow of credit. You've got major banks paying up to 2% over the cash rate for the simple old term deposit, and you've got lending rates moving a lot higher without official adjustments. So it's become a very difficult thing to manage, I think, for the Reserve Bank, and it's something that needs to be watched closely. I think it's really it's fortuitous that the Reserve Bank's having a break in January. They don't normally meet in January, so maybe we need a few months to sort of work this out.
Got a view on Bernanke as Times Person of the Year, and in the context of all of that, because of course he was very much one to be pushing the liquidity button big time this year.
Look, when arguably he was a bit slow to react to the crisis, and that's sort of been glossed over, I think. But yeah, look, when all measures were implemented, or all plugs were pulled out, he really did go the extra mile, and certainly has. He's a worthy
Well, that's interesting you say that, because the temptation is to lay plaudits at the feet of the Fed chairman, but of course you could argue that bankers now have, if anything, an inherent reassurance that there will be no Armageddon in the future, because history's now taught us that central banks will never let it come to that. How much does that send a signal of responsible banking post-crisis?
Well, that's an ongoing dilemma, and I suppose the regulatory reaction, or what's implemented over time, will go some way to turning that around. But I think that's a fundamental thing that really takes decades to get out of the system, and I do think that these regulations that they're talking about over time will go some way to resolving that. I think the focus, obviously globally, is to ensure that these banks are not inextricably linked going forward.
Okay, so maybe a hiving off of banking responsibilities and return to vanilla.
Well, it's interesting. The talk of reviving Glass-Steagall and these types of things. These are fundamental issues, and obviously that was a very positive development out of the Great Depression.
What was the most significant development for you this year, when you reflect on all the machinations?
Well, I think, in hindsight, looking at what credit markets have done this year, it really is a once-in-a-lifetime event, where we've had, just in the Australian iTraxx in investment-grade credit, we've had movements of, from mid-400s down to below 100 in less than a year. It's just an amazing development, and, interestingly, in the hybrid markets, in those sort of fixed income assets that dwell lower in the capital structure, we've seen some extraordinary gains. You know, up to 300% in some of the listed hybrids, and the same in the unlisted hybrids. So that sticks out for me as I don't think we're going to see that again. Well, I hope we don't.
Well, indeed. So as you kind of reflect now into what's likely to be the thematic for next year, are there going to be more corporate bond issuances? Are we going to actually see a retail bond market, an appetite for that in Australia? And if so, what, second half of next year? What will be the catalyst?
Yeah, that makes sense. I think, you know, obviously this consultation paper that's being circulated at the moment doesn't come into effect till halfway through the second quarter. So if there is going to be development there, it'll be towards the end of the year. But look, I think that the fundamental change in the markets, the return of securitisation is probably a long way off. So I think that what we will see is we'll see a development. We'll see a lot more corporate issuers coming to the market. There's a lot of companies that aren't rated, that are sitting in that sort of borderline investment grade, that are hostage to bank funding, and they need to develop their own brand in the market as an alternative source of funds. So I think we're definitely going to see a lot more vanilla corporate bond issuance through 2010.
As you say, they're between a rock and a hard place. There's nowhere else really to turn for that funding at the moment.
That's right, and it's responsible liability management to try and diversify your source of funds. So I think we're definitely going to see more of that next year.
What are you most concerned about into 2010?
Well, excuse me, I think that having just returned from Europe, the mood's very different over there, and I think that global growth is really the fundamental key. So once that's assured, then I suppose we can start to return to normality, or have confidence. But I think that's really the fundamental thing, and it was really encouraging to see, the Fed still talking about, still having this very accommodative line. I think, obviously the first step over there is to start to withdraw these stimulus measures and then look at monetary policy.
Is growth possible, though, so long as you have a ECB president talking about the vagaries of excess and the need to rein that in? And if anything, it hardly spurs a fresh intake of entrepreneurialism.
No, you're absolutely right. Yeah. And also, like an example of the same thing is this: we've just seen the deferral of these new regulatory measures. So I think that people or regulators, the stakeholders are sensitive to this, how important that recovery is. Definitely.
Jim, it goes without saying, we have more than valued your contribution through 09, and we'll look forward to engaging in further animated discussion next year.
Thanks a lot.
All right. Jim Stening there from FIIG Securities with us every week to discuss developments there in the bond market and credit markets.